Morning traders, this is TradeAlerter from ForexSignals.com coming to you on Monday the 8th of September 2014. Now what we're looking at here on screen is the pound chart. And if you're a Forex trader, you're going to know that it had a massive gap this morning, around 150 points. Now this is on the back of a new Scottish referendum vote which showed that the yes vote, which is for a split between the British Union, has actually gone ahead for the first time. Now we have been trading the pound for a little bit, and we've seen that the pound has dropped around about 1,100 pips in the last 7 weeks. Now this is a very big drop. When this happens, when you do have a trend change and you've got some sort of uncertainty in the market. All right, so in terms of how far I can fall, a lot of traders are asking me, is it likely to keep on falling? Now, it is likely to keep on falling while the news remains uncertain. So the vote is not until next Thursday week, so that's another 10 days away. And if the polls keep on coming in as negative as they have been, then you're probably going to see more and more analysis done. As more and more analysis done, people get used to it and may slow down the selling. We've gone a fair bit here. So 160 is probably going to come into view, and it's not a bad little risk-reward trade if you feel that the market, if the actual no vote is going to win. Now, in terms of if the no vote is going to win, I've done a lot of research on what's going on here because it's such an important story. Now, the bookmakers are still fairly confident that the no vote is going to win. It's not like a 50-50 bet here. It's more like they're paying around 3 to 1. And the reason is that these recent polls have changed aren't the same as the polls were last month, which showed no vote winning by up to 20 points, so 60-40. And what is expected in the next couple of days is that the UK Parliament will come out with some sort of olive branch to the Scotland independence movement, saying that you don't have to vote for a split up. This is potentially catastrophic for confidence in the markets, and you don't know what's going to happen next. And so what we'll be hoping to do is we'll give you more powers, or we'll give you greater control over the income tax that is earned in your country. Now, if that comes through and that changes the polls, you're probably going to see this pound stabilize, if not rally sharply. It's probably 300 or 400 pips worth of selling here. It's just taking advantage of the fact that the pound was in a weak spot anyway, as Carney had started to talk it down, and then the US started to be strong. So it was it was due for a general pullback, but the selling, especially in the last little bit, has been very aggressive, and it feels very much like fear. Right? So we were trading the pound for last month, and this month we ended up taking a loss around 166, so 164.50. And the levels I'll be looking to get involved in, it's under 160, and I'll be looking to sell some euro pound, because the euro zone is much more weaker than the UK economy. And if we can get past this vote, then we're probably going to have some very strong selling coming through. And I'm not talking about back down to 78, 75. I'm talking more towards 76. In the coming months. So what I'll be looking to do here is that the euro pound is on a huge relief rally here because of the news. It's taking advantage of that. There are stops just above this level here, and so this 80.35 level will probably go. All right, we're looking for the same sort of time that we see 160 on the pound, that we're going to be looking to sell into the euro pound, or buy the euros, or buy the pound Swiss. Euro pound seems a little bit more straighter. Euro Swiss has that. Pound Swiss has that Euro Swiss element that we don't need just at the moment, because the Euro Swiss is not rallying, even though we've had a truce accord in Ukraine. Now this is very concerning for the bulls. You're supposed to have seen a much stronger rally here, and if the war was to come back on, if this peace ceasefire is broken, then you may see that pull back towards 120.40 again, maybe 120.30, 120.10. That would make the pound Swiss a much more better buy than the euro pound sell if we get the euro Swiss even lower. Okay, just not yet. All right, so in terms of how we're going to play it, the pairs I like are the pound Kiwi selling. All right, it's a little overdone here. I'm not going to chase. And also, instead of short term anyway, and also the Euro Kiwi selling is something we're going to be looking at here. I've already sold a little bit here. Look, it does look like it can bounce from up here, but it's actually trapped in a lot by the two majors. Okay, so the Euro is not going anywhere too quickly. It shouldn't get back above 130. And if it was to continue that downtrend, then the Euro Kiwi is going to continue its slide. So look, if it gets a little bit higher, I'm only in for a little bit here. If it gets a little higher, sell again. Stops above this one, 56, 50-ish level. Okay, now that's one player. The other thing that's going on in the market is stocks in the US is continuing to remain high. Dollar yen is continuing to remain above 105. I was long here in the dollar yen. I just didn't like the price action on the stock market earlier today. Now, there is a relationship between the stock market and the dollar yen, and there's a pretty strong correlation. Yeah, so you're looking at when the stocks go up in the US, usually the dollar yen's going well, and I don't like this chart at all. If we were to break back below 2,000 in the S&P, I think the dollar yen's going to be due for a bit of correction, and also the euro yen and the pound yen are definitely under pressure here. Yeah, so euro yen, if it was to break this 135.80, I believe it is, level, you're probably going to see some market move back, even lower. And so I don't want to be long the dollar yen here if there is a stock market pullback. I do want to buy the dollar yen as close as we can down towards lower 104s. Okay, so got to be patient sometimes. You may miss out on the trade, but it seems a little bit safer. The other trade I would like to do is to sell the euro straight. Seems cleaner than selling pound straight because you don't have that headline risk, and it's something you can build up over time. I'll be looking to get in any move towards above 129.50. Yeah, and look, it may consolidate for a couple of days, but then the next move should be lower. The only way you're going to see that rally going forward is if you see the FOMC next week change its tune, which is possible given the weak NFP. But the latest talk that we've seen out of many of the voting Fed members has been quite hawkish. Yeah, so Yellen's probably going to have some changes in the statement. Now, if you see some changes in the statement, that should be dramatic. Yeah, that's when we really want to be long the US dollar, and we want to be watching the stock market. So that's another play we'll be talking about over the next coming days, and especially early next week. And it's something to do with what we call yield compression, and it may actually affect some of the commodity players. Yeah, so we've been holding off selling Aussie dollar, selling Kiwi, and not aggressively buying the dollar CAD because it's been outperforming some of the other majors, and that's because the stock market's been holding up. The US bonds have been low. If the Fed changes its announcement, its statement, you may see the yields in the US start to rally, and you may see stocks start to fall. That's a double hit to long Aussies and long Kiwis. And the way I'll be probably playing it would be the short Aussie, not the short Kiwi, because it's already outpaced a little bit there. And with the short Aussie, you're going to have some exposure to any sort of negative China stories that will come about from the Fed as well, raising rates. Now, this particular trade is a little bit controversial because there's a lot of talk that the Aussie is going to do well now because of the pound and the euro weakness, and the flows are going to come into the Aussie because it's stable. We may want to pick between Aussie, Kiwi, or Canadian dollar. It's just that the bigger story is going to be the Fed, more than the ECB easing, and the trigger for this sort of pullback in the Aussie is probably going to be the stock market. So that's what we're going to be keeping a close eye on, and that sort of play will start to trump some of that flows that are coming into the euro. Full short term this week though, we are selling euro Kiwi and pound Kiwi. All right, traders, good luck. Come into the trading room if you want to have a chat with me. You can see at .com we do have a live trading room. You can come in and have a chat there. You'll see me in there and a lot of other traders that can discuss the market and give you a bit of insight into what's going on. All right. Good luck there.